Hey, this is Jared Krause, host of the Buying Online Businesses podcast. And what does $50 million tell you? Well, I just recorded a really awesome episode with Mr. Gregory Elfrink from Empire Flippers, who are a website broker who have sold more than $70 million worth of websites. And from doing this, they've achieved many business awards, from brokerage awards all the way up into being in the top 500 Inc. companies in America. And after speaking with Greg, they analyzed $50 million worth of websites that have sold, so for the first industry report ever on website businesses. And in this podcast, we go through some of the report and talk about what are the best websites to be buying, what are the most valuable websites to be buying, what are the cheapest websites to be buying, and why to possibly not buy those websites. And also, what are some of the common myths people have about buying websites for passive income? So if you're looking to buy website businesses and make money online through website businesses, this is certainly a very valuable episode for you. Hey guys, Jared here from Buying Online Business Podcast, and today I am privileged enough to speak to Mr. Gregory Elfrink from Empire Flippers. And Greg, you've been with Empire Flippers for a few years now. You came on board when I kind of bought my second website business, and we're going to be talking about something pretty awesome today, which you've done a lot of research, got a lot of data on, and that's what's trending in the online business space, what website businesses are selling for, multiples, and what sort of business models are the more favorable models and what to look out for. So a lot of data to consume because I read through that report that you guys put out, and I'm pretty excited to talk about it. So thanks for jumping on.
Yeah, thanks for having me, man. And this report, as I was saying to you offline, was definitely a burden of love. As I think it's about 80 pages, and it was pretty intense to write, but I think our audience will get a lot of value from it. Even if you're only into one monetization, I've made it fairly easy to skip around to just the parts that are more relevant to you. But yeah, I was very excited to get this out, so very excited to talk about it as well.
Yeah, for sure. And so, where did you start off in your journey with Empire Flippers? Now you've started off in what position, and you just worked your way up through, haven't you?
Yeah, so I was originally, oil field roughneck in Alaska, and then I came and worked with Empire Flippers with the apprenticeship program that we had at the time. So came out to Southeast Asia as an apprentice, became the content manager. And now a little bit over 3 years in, I'm the director of marketing, and I pretty much oversee all of our marketing initiatives and create almost all of our marketing initiatives. And that includes the fun stuff too. Like now I'm creating systems for KPIs and SOPs and all that kind of stuff, and still producing a lot of content as well for the company.
Yeah, awesome. And like, for anybody who doesn't know who or what Empire Flippers actually are, they're the biggest marketplace, one of the biggest marketplaces online for buying and selling websites. And that's why they've conducted so much research and data from, the $50 million plus of website businesses they've actually sold, which we're going to dig into now, Greg. And one of the first things I want to ask you, and it's probably on the tip of the tongue of everybody that wants to, know about this and get into the online business space and start buying websites, is, what did you find from the data that were probably the most valuable business to buy, from the research you've actually got?
Yeah, so in many ways, is probably won't be surprising necessarily to your audience, as I think your audience is probably much more into the content site game than other monetizations. But from what I have seen, it has been mainly content sites that on average have the most value. Now, and including like even the exception. So like on average, their sales multiple tends to be better, and the businesses that have a better than average sales multiple, the highest one we sold was for 57x, and that was, or 51x, sorry, and that was an affiliate site as well. So content sites are definitely the standout winner on not just like on one of the most valuable businesses, but on many different levels. You do see e-commerce starting to gain on us, gain on content sites. And one of the reasons why content sites are so valuable is simply because they've been around the longest. Right? They're one of the most trusted business models on the internet in terms of entrepreneurs wanting to make money online. It's a very, there's a ton of courses. There's a lot of roads that lead to creating an affiliate site, and investors just trust them because I think Amazon's associate program, for example, came online in like 97 or 98.
Yeah.
It was like one of the first ones. So it's a business model that's been around a lot longer than, say, e-commerce or drop shipping. Definitely things like Amazon FBA, and it just takes time for the market to gain trust in a model to where they're willing to pay a higher multiple. But we are seeing those come up as well.
Yeah, I noticed that in the report, FBA definitely, shot up, and there's no reason why they shouldn't. But for people that are listening, talking about that 57 multiple, and what a multiple actually is when you get a website business that's for sale, you normally average the 12 months of the net profit. So each month, over 12 months, you'll get the net profit for each month and average that off over the 12 month and get the average net profit for the business. And then, you times that by whatever multiple it sells for. And first out, Greg, when I first bought my first website, and I think I got a 20 month multiple or something like that. And I've actually achieved far better multiples than that many years ago now. But as we can see, the average used to be 12 to 24 months, and then it went up to 24 to 36 months, and it's slowly still creeping up, especially from what I've seen from the report. But to sell a business at 57 months, is that like a record, or have you seen that happen much, or what?
Yeah, that was definitely the highest one we've ever had. So that business in particular was a very interesting business because it was such a fast growing trend. So it's really more of the exception than a rule. Like probably shouldn't expect to get such a high multiple. I mean, this business was adding, I think it was like 10 grand a month extra every single month to its net profit because it was in such a hot growing niche. So it was like every month the price was going up significantly, right? Not only on just if it stayed at the same multiple, it would still be going up significantly. But that was one of I think the only business that we've ever sold were actually sold for a little bit above list price just because of how fast it was growing. So that was a very interesting case study. But we have a bunch of other ones too that are above average sales multiple. I would say when you read this report, like the average sales multiple in 2018 for content sites was 27.17x. But I would actually say, because you got to take into account that number takes into account all businesses we've ever sold that year across all price ranges and quality level. But when it comes to a quality content site, you're probably looking more into 33 to 35x.
Yeah. Yeah. So that means for everybody listening, that's 27 times the average monthly net profit of the business. That was their average, right? And so content sites are probably the most valuable and the most sought after. And you said that's because they've been around and they've gained, the way I'd see is they've probably got so much more, a bigger brand, a more trustworthy audience. And when you buy a trustworthy audience, you're buying yourself into a good business, right? A good brand. So is that why you'd say that's probably the most popular?
I mean, that can be it, but what we see on most content sites is that while they could build out a good addressable audience, like what you were just mentioning, most of them don't. So most of them don't have an email list in place. They're not capturing traffic in any way. So a lot of times buyers view like a common thing I tell sellers is you shouldn't, pretty up your business to where it's like this perfect business. If you talk about the failures that you've had or the weaknesses of the business, a lot of times that's what a buyer wants to hear because that's to them the potential, that's the opportunity, right? So a lot of times they like the fact that these businesses don't have email lists because that's something they can add and, potentially significantly increase the revenue. And now you have an addressable audience. It opens you up to a lot of different things you can do. But one of the other reasons why content sites, I think, are so sought after is simply because once you have it ranked in, say it's an SEO driven website, which most of them are, once you have it ranked, it's fairly hands off. Like we don't want to use the word passive because nothing is ever truly passive, but you can go away from that site for a couple weeks and maybe even a couple months, and it's still earning you a paycheck every single month, right, from that traffic that's coming in. Because unlike Facebook ads, you don't have to monitor that SEO traffic. So the asset class is extremely attractive to both someone just starting out in buying online assets, but it's also very attractive to veterans that have a large portfolio because of the ease of management and the ease of and the potential of the content site itself. When you do things like an email list, CRO, install and implement new content that uses the DR of the website to start ranking in Google easier. All those factors come into play that make it just a very attractive asset class.
Yeah, for sure. So what you're saying, Greg, is that for people looking to buy websites, especially content sites, is the ones that you guys are putting up. Normally, when you speak to the sellers, it's great that they do just point out their flaws and their vulnerabilities in the business. So us as buyers can come along and see what areas we can grow the business, such as build out an email list and do some email marketing, or perform some sort of CRO, which you mentioned before, for everybody listening, is conversion rate optimization. And how that works is, you make sure you get a better close rate in sales. And then also there's, you're looking for things where you can build the SEO on these content sites as well. Is that the main outcome, to sort of bring both people to the party, where somebody's not, because what I find is I see that a lot of people want to sell their site because they're not really doing too much with it, and it's just sitting there, and they're just like, oh, well, I've got this bigger one that earns me more money. How about I just get rid of this one? Do you see that quite often?
Yeah. So you're saying, do I see a seller wanting to just get rid of a site that's throwing off money to invest into something else? Or sorry, could you rephrase the question?
Yeah. So do you see a lot of business owners or website owners that have multiple websites and they want to sell off one website because they just don't have the time for it?
Yeah, so that's quite common. So we have a type of seller that we call the factory mindset. So typically these guys, they have maybe 5 to 10 sites they're building at any one given time, and maybe they have like 4 or 5 other sites that are built that are making money. And what they'll do is they'll take 2, maybe 3 of their sites that are earning well, and they'll go and sell it with us. And then they would take that money that they get, whether it's $50,000, $100,000, $200,000, they'll put that into kind of like a war chest to start their next fleet of sites, or they'll use that war chest to level up their other sites. You can do a lot of things a lot quicker when you have $200,000 to reinvest, right? All sorts of services you can buy, team expansion you can do. There's a bunch of different things you can do. Just the doors weren't really open to you until you sell. That's why I often tell people, especially after being in the business for so long, that in many ways, like while building out a content site is 100% a business, I often tell people until you sell your first affiliate site, your business hasn't really started. Because when you sell that first affiliate site, you're able to snowball that war chest of income into so many more lucrative projects, whether that is via quantity of sites or by you competing in just a much more competitive and lucrative space. And now you have the money to actually compete. So it's a very powerful strategy.
Yeah, and for those affiliate sites, you can also add more money to it through different monetization strategies as well, right? Where you might just be, writing really good content and pushing people to affiliate products, but you could also chuck up some ads and do some different things that way too, which is it's a great value add for anybody looking to buy those types of affiliate websites. And so, Greg, you mentioned those content sites are quite valuable, but is that because their multiples are the lowest, or what type of business model are you seeing that are selling for a lower multiple or the lowest multiple?
Yeah, so on average, for the business model we probably have the most data on, where I can speak confidently, because some of these business models are fairly esoteric, like merch by Amazon and Kindle publishing businesses, which we do sell, but we don't really have enough of them to say one way or another on what's going on. Like we do list out what we did see in the report, but we put a disclaimer that there's just not enough businesses here to really make any substantive claims. But I would say the one business that has probably the least or the worst multiple, and just in general is the hardest to sell, is drop shipping stores. And that's because drop shipping, you don't really have a moat around the business, and usually they're ran through Facebook ad, through like a Shopify store. And for your audience that don't know what drop shipping is, it's basically like you find a middleman that will sell the physical product, and you don't have to actually buy the inventory. You only buy the inventory that you sell. So it's kind of similar to affiliate marketing in some regards there, and that saves you a lot on inventory costs. Now the problem with drop shipping businesses is while they can be highly profitable, and we see drop shipping businesses just absolutely crushing it all day long. But the
Yeah.
problem is that anyone else can come in and sign that same middleman contract, create their Shopify store, and running Facebook ads all in an afternoon, and now they're competing with you. So drop shipping businesses are very hard to sell because unless you have something that is really resoundingly unique, whether it's the product where you have exclusive rights to sell it, or you're one of the few who have the rights to sell it, or maybe you built up a really good community and a brand. So just in general, drop shipping businesses tend to sell the hardest and for the lowest multiple.
Yeah, and that's what I tell everybody that's in my community as well, is that, drop shipping is not the worst type of business model. And it's actually a really favorable business to start because you don't need a whole lot of capital. But to buy a drop shipping business is that it's better paying a higher multiple for a drop shipping business where it isn't something that is very replicable, where somebody can say, oh, cool, I found this product on Alibaba or whatever it is, and then just start selling it. Or, they go on Oberlo or different sites where they can just link up to Shopify and sell any sort of drop shipping type product with some great Facebook marketing and advertising. That way, somebody could see really good products. And this was what happens. People will scour the internet for really good products and go, oh, this is selling hot, and people are selling a lot of it, and that business is doing really well. And then they go and replicate that business. And that's what I see. That's why you guys have people sign NDAs, which are non-disclosure agreements. So when they go to look at these websites that you guys sell, is they can't just go away and rip the data off and become competition. Whereas other marketplaces like Flipper and Shopify Exchange and open marketplaces where you can openly see the listings, those businesses are more susceptible to, competition.
Oh, for sure, especially when they reveal the niche up front. Like, I've had some pretty scary conversations with, I won't mention the actual platform, but I was talking to a person that worked at that platform, and we were talking about drop shipping and specifically. And she was like, I've always thought about starting one and maybe, or like buying one of these over, on our platform. But then I look at it like, well, I already know the products and the niche. Why don't I just copy it? Like, oh, that's terrifying. It's saying for like an employee that works there.
Yeah, man, that's not
So,
great.
but yeah, for drop shipping, like we are seeing like that multiple is rising. Like for example, drop shipping specifically in the e-commerce category saw a 5% rise in their multiple year over year, and that brings their average to actually a respectable 25x. Now, there's a few things that are going in there. In that, one, in 2017, we were letting some lower quality drop shipping stores on our marketplace, like ones with sourcing products through Alibaba and AliExpress, that kind of stuff. And those tend to be very poor stores. Now we don't do that at all. And so now the only ones that we really accept on Empire Flippers have to be of significant quality in some way where we really feel like we can sell it, because otherwise it's a waste of time for both the seller, us, and our buyers, right? But with that said, even with that increase in the average sales multiple that brought it up to 25.1x, they still take quite a long time to sell. So you're looking at an average number of days of 63 days versus a content site. In general, a content site will sell for within 22 days. So you're looking at over double of the time on market, right?
Yeah.
To sell those businesses, and for a less multiple, because the average multiple for content sites again was 27.1.
Yeah, that's true. And so, like you guys can see, everybody listening, just because you said content sites are more valuable, it doesn't mean they're cheaper, right? Value does not equal cheap. That's a really important thing for everybody to understand. But when we come to look at these dropshipping businesses for sale, you know, whilst they're not selling at the highest multiple and they're spending more days on market, that and people may see that as a from a negative aspect. The way I look at it is that, you know, problems are just opportunities but in disguise. And when you can come in, you can see these dropshipping businesses and you can see that they're not moving too quick. That can mean a bigger opportunity for you to buy it at a multiple that is favorable enough to become a good investment. So it's a pretty good thing for everybody to understand that there's definitely opportunities in everything, no matter whether it's something that's selling for a higher multiple or a lower multiple. And so, no, you go.
I just wanted to say, like, I don't want to sound like I'm beating up drop shipping. It is a great business model. If someone's out there listening to it and they want to use it to what I personally consider to be its full advantage, what I would recommend is you can set up your store, you start selling the drop shipping products as kind of a laboratory experiment, see what kind of products are really selling, because it doesn't really cost you much to upload your catalog and so on, other than like maybe the ads running to it, to see if you can make a profitable campaign. But once you find one that is profitable, I highly recommend doing what we see most e-commerce store owners do. So outside of FBA, most e-commerce stores that come to our marketplace, they are a mixed monetization. So they have a bit of a drop shipping aspect, but then they also have their actual sourced product. So you look at the product that sold the best on your drop shipping store, then you go out and source a better version of that product that's yours as your brand. And now you can sell that, you get higher margins, and you use the drop shipping to increase that average order value. So a good example would be like, say you went and sourced a coffee grinder or a coffee machine or whatever. When they go to check out your branded coffee machine, you can have upsell offers of coffee beans that are actually dropship products. They're not your products at all. And that can increase your average order value significantly. And it also allows you to test what is worth sourcing before you go out and spend that $20,000, $30,000 on getting the actual product.
Yeah, for sure. And that's what I was going to bring up is FBA businesses. So everybody that doesn't know what FBA is, fulfillment by Amazon. So when you want to sell products on the internet, or from a website business, you can buy a whole bunch of those products in bulk, and then you don't want to have to store them in your home or your garage and then come home from work every day and send them out whilst you're still doing that as a side job. What you can do is you can have a order fulfillment agency. And before FBA even existed, there have been many order fulfillment agencies, such as like what Zappos used back in the day. And now fulfillment by Amazon means they have an Amazon warehouse where they fulfill orders for you. So you can buy your bulk products, whether it be from China or wherever. And I noticed there's heavier tariffs coming from China to the US. I saw that in your report as well, Greg, where people they can send their bulk products over to this order fulfillment agency, and when people buy it off their website for sale, then this order fulfillment agency, which is fulfillment by Amazon, will notice that, track it, and then grab that product and send it out to the customer for you. So you still do need to buy in bulk, which is where you're spending more capital as a business owner as opposed to drop shipping, where you only buy the products that you sell and you buy them at wholesale item per item. The Amazon FBA businesses, you buy a lot more in bulk, but you have that more protection because you can have your own products and you can brand those products.
Yeah, exactly. And I think what you just said about the buying in bulk to get a better profit margin, I think that's fairly true, and that's a big reason why e-commerce store owners and Amazon FBA owners are sourcing their own products. A lot of times they don't have that great of cash flow because they're putting it all back into the business to try to get to that the next level of sourcing, to where they can get to the next level of bulk buy where the profit margins are even better, right? So it can be a pretty stressful business in that sense. But I think that is one of the cool things. I've seen someone just recently actually talk about why don't all you content site builders just build an e-commerce business, because your profit margin is actually much bigger in e-commerce. And I would argue that's not necessarily true, because with a content site, your profit margin could be thousands of percent, right? You spend the $500 on content, maybe a couple thousand on ranking it, and that content is bringing in hundreds, possibly thousands of dollars a month. Versus your physical product will always have a permanent cost eating into your margin, which is the cost of sourcing, the cost of the logistics, the cost of storing, and of course the actual Facebook ad or any kind of advertisement you're running. So I thought that was an interesting perspective.
Yeah, I like content over e-commerce because you can leverage it in a way that you do get a far higher ROI. But everybody's different horses for different courses. And I noticed, Greg, that there was some in the report. You guys went away and analyzed $50 million worth of businesses, and you've sold so many businesses. And, at Empire Flippers, you guys have got a lot of accolades in business awards and stuff like that. And through learning all this sort of stuff, you've seen some pretty common myths. And I hear a lot of common myths from first timers that are coming to the market, just wanting to start making money online, especially buying websites. But what would you say, are some of the biggest myths about buying websites that just don't serve people?
Well, if you're just starting out, a very common one I see. I don't know if I mentioned this one in the report, but it's something I personally dealt with before I came onto Empire Flippers. Is why would anyone in their right mind that's making, say, $5,000 a month from a content site ever sell that site? That doesn't make sense. It must be a scam. Which is obviously not true. Like, you and I both know that's definitely not true. But a lot of newbie buyers are just starting out. They don't know that's not true, and they're right. The internet is full and littered with scams, right?
Yeah, that's right.
So when they see this, they often wonder, like, well, why would anyone ever do this? And the reason why is one of them I mentioned to you earlier. They use that lump sum of money to supercharge their other projects. There's other reasons too, like maybe they're going through a divorce, a medical issue. They need the money now. We had one person, they just sold and they bought a house, free and clear with the money that they sold. That was really important to them, and so that was the reason why they sold one of their businesses. So that's a very common starter myth. So
I hear
that's
that.
what I wanted to get on.
Yeah, I'm glad you brought that up because it's coming straight from the horse's mouth there rather than, I say it a lot and I think I may be sounding like a broken record, but it's it's pretty funny that everybody in this industry sees it like, hang on a second, there's got to be something going on here. This person just wants to take my money and run.
It's so funny, Jared. When I was first, this is like almost, over 10 years ago now, was first trying to get into the internet world, which, spoiler alert, it took me about 10 years to work at Empire Flippers to really break out in it. So it was a very long time trying to get into this game. But I remember working in the oil field, and a lot of my friends, they were like, you can't make money online. That's like where you watch cat meme videos on YouTube, stuff like that. And I was like, guys, you guys know YouTube is a company, right? Like, that is a business. It was just, it's this weird disconnect. So I always like to bring that up. If someone is just getting started, as long as you're looking at a reputable broker site, if you're just getting started, most likely what you're looking at is not a scam. Now, if you're looking at a private sell as a person just starting out, there is still a lot of scams out there. So what my recommendation for you as the buyer is to really look at businesses that are worth over $50,000, because once you get over the $50,000 level, that's when most of the scams, probably like 90% of them, really go away, because it's just a lot harder to manipulate the numbers of traffic and Amazon commissions and stuff like that. Like when you're the affiliate site's only making like $200 or $500 a month, that might sound like a good investment because you can buy it for like 10 grand, maybe less. But a lot of times what's happening there, that one of the scams people do, is they just get their friends and family to buy products through their Amazon affiliate links, and you don't need that many friends and family to do that every month. to reach a $200 average per month. So that's one way people try to trick other people into a site that's making more than it actually is. So, but once you get over that 50K level, a lot of that just goes away. And if you use a reputable broker like us, where we vet every single business to make sure it's legitimate, you don't have to worry about that at all.
Yeah, I was just about to say that as well. When I spoke to Joe, your CEO, he was mentioning how hard you guys vet those businesses. And this is what I say to all first timers as well, is that, and man, people have come to me, Greg, and like, I want to buy this business and it's like $3,000. I'm like you get what you pay for, and you're just not getting, that's not a valuable business. And people want to start off by dipping their toes in the water. And I bought my first business for 15K. And the reason I did that is because I was like, I don't want to start like, and that's even starting at the lower end of the spectrum, because, anything under that, it was just so much more. You're still buying a startup, I see, and it's so much more work to get that business to a point where it is getting some sort of semi-passive. And for everybody listening as well, like I highly suggest buying anything over the 10 to 15K range as well, because and from reputable brokers, because they're vetting, only a third of those businesses are getting through and onto their, brokerage and listings, because they've got their reputation at stake as well. And I think that's a really awesome thing that you mentioned there, Greg, is just to outline that, you do get what you pay for.
Just to like, as a bit of a feather in my cap, there's something that we're all proud of is our vetting department and our migrations department. So out of all the brokers out there, we're the only one that's really separated out everything into specialized teams for like every aspect of it. So we have the sales team, my vetting team, migrations team, customer service, and a marketing team. And we're the only ones, as I know, that does such in-depth vetting. And we're the only ones I know that actually will handle a migration from taking it from the seller and giving it to the buyer and making sure everything's correct. And we even have that safety for the buyer in there on the inspection end, where they get a 2-week inspection period to make sure that the revenue and the traffic is lining up to as long as it's on 50%, then we're all good to go. But sometimes people can miss things, so we want to make sure we add in that extra layer of protection for that buyer. And for the seller, we also add in the protection of if they ever do an earnout, where say like someone site, like say $700,000, buyer came in and put down $600,000 and promises to pay the remaining $100,000 over a 12-month period or whatever it is. Our migration team actually manages that earnout on behalf of the seller. And us as a team, we would never tell the seller to take an earnout if we thought the buyer wouldn't pay, because we actually take our commission from the earnout as well. So we put ourselves in that same situation as the seller. So as much as possible, we try to make it so it's a win-win-win. Win for the buyer, win for the seller, and obviously a win for us. We want everyone to win. We don't believe it's a zero-sum game. So
yeah, and that's awesome. You guys are very invested in every single deal. And for everybody that, just because they vet a whole lot of businesses does not mean that you need to be really good at your own research and due diligence as well. So, and for everybody listening, if you want to get some resources on how to do due diligence, I have a due diligence framework that you can get for free. It's something that I've been using for many years now and gotten better and better and better at it. I also have a website evaluator tool that you can go away and check out that on my website. But I wanted to ask you, Greg, what other myths have there been about, in the website industry of people that are selling and buying websites? I noticed there was something about PBNs and...
I don't know if you've read this, but I did a whole research piece on PBN. So I think it was about 10,000 or 11,000 words, blog post called The Risk and Rewards of PBNs.
Yeah. Actually, I saw that. Yeah, that was a while ago, right?
Yeah. I analyzed 10 sites, 5 that had PBNs, 5 without, and what happened 6 months.
Before you go into it, sorry, can you explain what PBNs? Because I know what PBNs are, but
for sure. Thanks. Sorry, I'm so full of jargon. Thanks for slowing me down. PBNs, they stand for Private Blog Network, and all it is basically someone had a site. It might have been a local business, could have been a blog, and they got a lot of good links. And for whatever reason, they let that website more or less die. So it either was about to expire or it did expire, and an SEO person buys that domain, and all those backlinks, the Google juice going to those sites, that SEO now uses that site to point that Google power towards their money site, the site they're actually wanting to rank and earn money from. So those PBN links are extremely powerful. A lot of times more powerful than a guest post link, though they are a little bit more risky, of course, too, because Google doesn't like it at all. So it's a gray hat strategy, leaning towards a little bit of the black hat, but it's pretty solidly gray hat in my opinion. But yeah, so PBNs, I did that research study on to see, like, okay, everyone always says these things are so risky. And even my friends, like good, close friends of mine in the SEO space who use PBNs, they're like gigantic fans of PBNs, told me that our buyers are crazy to buy anything with a PBN. Like, or that's not like, they're not making it seem like a great purchase, right? So I was curious. So I went in and I looked at our database. And I use Ahrefs to gather all the data because obviously I didn't have access to their analytics anymore. So I just use Ahrefs for everything. And what I found was PBNs were about as risky as white hat links from what we had sold. Now, there was two sites, or one site rather, that failed on the PBN research case. And that one failed worse than the one that had white hat, which makes sense because PBNs are supposed to be more risky. But what didn't make sense was that only one failed, and only one failed on white hat. So they had the same failure rate, more or less. So what I tell buyers when they think that buying PBN sites are too risky, I always tell them it's not necessarily the case. It's more nuanced than that. So here's what I mean. If you're an investor, and this probably isn't a starting investor strategy, by the way, this is more advanced level investing where you have have some capital, more you're doing. But if you buy 5 PBN sites and you're looking for a dividend, like an ROI on your income, then PBN sites are great in the sense that if one fails, or even if 3 fail, you're probably still making a vast superior interest rate than, say, in the stock market or with real estate on a cash on cash return basis. And also, if it has a PBN, if you're a savvy buyer, you can often negotiate the price of that business for a lower multiple or lower sales price. And often sellers know that, like, if the buyer knows about PBNs, they're kind of, well, I gotta be flexible. Like, I can't argue against it because I would buy a site with a PBN. So he's totally right, right? So buyers know this, and so they'll negotiate with the PBN seller to get a better price. And then, since they also tend to know SEO, or they have someone on their team that does, they'll slowly replace those PBN links with white hat links anyways. And if they have a failure rate of, say, 2 out of 5 sites, that tends to be an acceptable failure rate for them, because the other 3 sites are making such good ROI for the money spent. It was worthwhile to them. So that is some of the stuff why I say that's kind of a myth. Like, there's a lot of SEOs that would just write off buying a PBN site completely, but I actually think that's not a terribly good mindset. It's a more nuanced argument than that, in my opinion.
Yeah, you've got to look at the data. And for anybody who is going to buy a site that does have PBNs, which is private blog network, and a network of links that are coming into that website, is that always have an agreement set up with the seller when you do go to buy it, and then organize what you're going to do with those PBNs further moving forwards with the business, whether you keep them or you move them over to white hat, which, for everybody listening, white hat SEO tactics are good. Black hat are bad, and you'll get penalized by Google. Grey hat, yeah, and grey hat are in the middle. And so, Greg, I want to ask you, lastly, what are 2 of the biggest predictions moving forwards for websites, buying and selling websites in coming from the end of 2019 into 2020? Is there 2 or one big one, or is there a couple? Like, what would be the biggest predictions moving forwards?
Well, I think we're going to see a lot more blended e-commerce businesses. So we bought and sold, and that's just based off our current data, because right now the majority of them are already hybrid. So by hybrid, I mean a mixture of sourcing their own products and drop shipping to increase their AOV. So I think we're going to see a lot more of that. It just makes sense to me, especially for these bigger stores that don't necessarily want to source everything. I think one of the biggest things though that we're moving into, and we definitely moved into it quite a lot in 2018, and even now in 2019, we're about halfway through the year almost. And that is buyers are hungry for real brands. So even when I first came onto the company, we were still selling sites that were, not the greatest brands. They were exact match domains. So if it was again like a coffee grinder, the site might be like bestcoffeegrinders.us, like that's a pretty not a great brand, right? So what we're seeing now as the market is maturing more is people want to buy real brands. So they're not looking for bestcoffeegrinder.us. They're looking for coffeehero.com. They want something that they can sink their teeth into, that can expand, that has a lot of potential to do more. And if everything was equal, so let's say those two examples, if everything was equal, like same traffic, same revenue, same net profit, same work to maintain as is, they would rather pay a much bigger price for the Coffee Hero site than the bestgrinders.us, because the brand is such a powerful thing that they want to invest in to grow the business. So that is a trend we're seeing more and more. And like I said, when I came on 3 years ago, that wasn't as apparent, but now it's much more apparent, especially as you get into bigger deals. So like you can still get away with the EMD, the exact match domain, like bestcoffeegrinder.us. If it's like a $20,000-$30,000 site, there are still people who will buy it. They're not necessarily looking to expand the business because there's really nowhere to expand it. They're looking to just get that dividend coming in every single month. But if you're looking to sell a six-figure, multiple six-figure, or even a multiple seven-figure site, then you're going to need to invest into a better brand as much as possible, into something where the buyer can look at that, they'd be proud to own it, and they can see all the different avenues of what they can do with that brand.
Yeah. Brand, for everybody listening, brands are so important because a brand creates trust. And when you can create trust, then you can create, real problems. I mean, not real problems, real solutions to people that have real problems that are seeking somebody that is trustworthy from a big brand. And then you can generate a lot more income from that type of business. And so that's really, really important. And what I'd like to kind of finish off with, Greg, is to let people know that, the time to start buying websites, if you're looking to start making money online, 90% of all startups fail. Why wouldn't you want to buy one that's already past that 90% failure rate? And then you can see that the multiples are creeping up year by year by year, which means website businesses are getting more and more expensive. And doesn't mean they're not great investments. I mean, you can still achieve, 20%, 30% return on your investment per year, which is more than traditional types and forms of investing. But to get in now, ideally would have been great to get in a couple of years ago, like I did. Yeah, but now's just as good. Well, if you've got,
just to say something on that, people always say like, oh, I wish I did this back then. Even in companies, like like, oh, I wish I was with the company back then so I could be in this position now, that kind of thing. And I've been in the game for a long time, like understanding online businesses and teaching myself, and at Empire Flippers for a relatively long time, 3 years. And I would say that while there is more competition, the multiples are going up across the board. I truly believe that right now there's better opportunity than there's ever been. While there is more competition, the barrier to entry is so much lower, and there is just so many varied types of opportunity out there that really speaks to people in different ways. Like what we were saying earlier, I'm a content guy. Obviously, I love content, but some people are an e-commerce guy, and that's their thing. And so there's so many different opportunities out there right now for people is pretty crazy, to be honest. And the multiples, while they are going up across the board, they're still much lower than say an offline business, like a brick and mortar business, mainly because there's no financing in our industry. So if you're a buyer looking to start and you have good capital, you have liquidity, then you're in a pretty awesome position right now to really get your teeth sunk into this business, or sunk into this industry rather.
Yeah, for sure. So So much value through this episode, Greg. I just want to appreciate you coming on. Where is the best place to find out more about you and possibly get this report? Is it best to just go to Empire Flippers or?
Yeah, so if your audience wants to connect with Empire Flippers, obviously empireflippers.com. If they want the report, it's just empireflippers.com/industry report. And you just fill out a little opt-in, and we will give you a thank you page that has a download link. And from that page, you can also schedule, if you're a seller, you can schedule an exit planning call. We now have a full-blown exit planning team that will help you maximize your exit. Whether that's a month-long exit plan or maybe a 12-month exit plan, that obviously depends on what business you have. But we also have a free criteria discovery call offer there as well, where if you're a brand new buyer and you don't really necessarily know what you're doing yet, we're happy to coach you through some of the processes, like help you set up some goals, help you create your due diligence framework, all that kind of stuff. If you guys want to connect with me personally, my email is greg@empireflippers.com, usually pretty easy to get a hold of, or you can add me on Facebook, which is facebook.com/Gregory the Writer. I'm terribly addicted to Facebook, but if you add me on Facebook, be forewarned, I write a lot of bad poetry on there, so.
Awesome. Well, I'll put that link to the report in the show notes, and I can chuck your email in there as well. And for everybody who is listening, thanks so much for tuning in. To learn more about how to actually go away and buy these website businesses to ensure they're good investments before you actually buy them, head to my website, buyingonlinebusinesses.com, and there's also resources there, like I mentioned before. And if you actually like this episode, please be sure to subscribe, like it, and go away and leave a review, letting me know what you actually liked about the show, so I can bring more of that to each and every single episode. Thanks, guys.